Welcome, everyone, and thanks for joining us tonight. My name is Ingrid Geis, and I'm the current chair of the Stop and Steer the Money working group that is a part of 350 Mass. For those who might not know, 350 Mass is a volunteer-led grassroots environmental organization. Our advocacy focuses on legislation and direct action. We are absolutely delighted to have Lex Can and the Massachusetts chapter of Elders Climate Action as co-sponsors of this webinar this evening. The Stop and Steer Working Group was formed about a year ago to focus on issues of climate and money. We meet the last Thursday of every month at noon. And so if you're interested in getting involved, please reach out to us. Our goal for this webinar tonight is to provide you with a framework and some suggestions for finding banks and credit cards that align with your values. We'll also talk about amplifying the message so that our personal choices can be translated into a larger, more powerful movement. After the presentation, which we'd like to add is Massachusetts focused, we will share in the chat and then in a follow-up email links to documents with all the information covered in this presentation and more, as well as a link to the recording. The presentation will take just over 20 minutes, after which we will try our best to answer any questions that you may have in the remaining hour. And we're asking that if you do have questions to please put them in the chat. Before we begin, I'd like to read you a disclaimer. This presentation was prepared by volunteers of 350 Mass in a Stop and Steer the Money working group. We have no ties to any of the companies that will be mentioned. Our presentation will explain the reasons for our recommendations, but the final decision is up to you. Okay, so why are we talking about money anyway? Well, we know that banks lend to the fossil fuel companies. We know that investment managers and pension funds invest in the fossil fuel companies. And we know that insurance companies insure the fossil fuel industry so that they can continue to build their pipelines. Effectively, our money enables climate change. And so what we're trying to do is to stop the money that funds the climate chaos and to instead redirect it or steer it to protecting the climate, or at the very least, not hurting the climate, and to strengthening our communities. Here is a chart of the worst bank offenders, or the biggest lenders to the fossil fuel industry. The numbers next to each name show you what these banks have lent to the industry in just the 5 years since the Paris Climate Accord was signed. This data comes from the Banking on Climate Chaos report, and it gets updated annually. Of those worst offenders, these are the 6 that operate in the state of Massachusetts. And we know that Chase, which is the #1 offender, has been expanding its presence in our state. So if you find yourself banking with the worst offender, don't panic. We are here to help you and help you to make the changes that you need to make. But obviously, before you leave a bank, you have to find a bank. And so the question we're going to talk about tonight is how to do that. Well, if you care about climate and you care about social justice, and we're assuming if you're on the webinar tonight, you do, then we propose that you think small and local. It would be really great if there was a readily available screen to find the best climate-friendly banks out there, but unfortunately, there isn't one. But we believe that this framework of thinking small and local will get you pretty close to about 100% of the way there to finding a climate-friendly bank that's also enabling social justice in your community. Why small? Well, because the larger a bank is, the more likely it is to be lending to and investing in the fossil fuel industry. Small banks simply do not have the capacity to do this. And a small bank is likely to be more locally oriented and likely to be taking an active role in investing in your community in a positive way. In the process of doing our research, we learned about the Community Reinvestment Act, or CRA, which was established in 1977 to enable financial institutions to meet the credit needs of the communities in which they are chartered, including low and moderate income neighborhoods. The CRA basically allows us to assess a bank's commitment to its community. It discourages redlining, which is the practice of taking deposits in one community, but then only extending loans in another, perhaps more attractive community. The CRA basically encourages banks to balance their deposit taking with their lending. And when they do that, this encourages investments in low-income communities. The CRA also encourages banks to do homebuyer education and to make local community donations. In Massachusetts, we are lucky to have CRA rankings or ratings, and that allows us to see very clearly how a bank is doing in terms of their commitment to the community. And the ratings are updated at least every 5 years, and they're available to the public, so that's good. Since we're going to ask you to consider a number of credit unions tonight, let's just review for everybody what a credit union is. It's basically a member-owned, not-for-profit financial cooperative. Credit unions were first started in Europe, and then they made their way over to North America, first through Canada. And the first US credit union was actually established in New England. Credit unions typically have a common member bond. It might be that members work at the same place, or they worship at the same church, or they belong to the same organization, or they live in the same community. There's always going to be some kind of common bond there. And there are both state and federally chartered credit unions. And for our purposes, there's no advantage or disadvantage for one or the other. So given our framework to think small and local and to choose banks with strong CRA ratings, here are the first of our recommendations for you to consider. Here is an example of 3 state credit unions that have outstanding CRA ratings. And I'd like to just mention again that at the end of this presentation, you will be getting links to our documents, which have all of this information in them, so you don't have to frantically write down all the names that we're going to present to you. Next, we have state credit unions that receive a highly satisfactory CRA rating. So federally chartered credit unions, unlike their state counterparts, do not have CRA ratings. And we learned that there are 107 of them. And unfortunately, there's not really an easy way to screen through them to see if they meet our metrics or not. But we did do some research on these 3 that are highlighted here, and they definitely would align with our values. And they're also highlighted because these 3 accept a broad membership, which could be a plus. And also, as we'll see later on, they also have their own credit cards. So now we turn to local banks, and these are the ones in Massachusetts with an outstanding CRA rating. And then these are the local banks with a highly satisfactory CRA rating. So you can see that there's actually quite a few names to choose from. Now, if you don't see your current bank on the list and you're interested in figuring out how it fares, there's a few things that you can do. The first thing is you can check its CRA rating, and in the documents that we'll be sharing with you, there is a link that will allow you to do this. Second, you can take a look at the bank's website, but we have to warn you to beware of greenwashing. If you're doing research on an institution and you're reading the literature that's produced by that institution, then you have to expect that they are going to put themselves in the best light possible, even when it's not entirely true. And of course, the last thing for those of you who are more gregarious is to just simply go and talk to someone at your bank about its fossil fuel exposure. And in the documents we'll be sharing with you, one of the documents is a guide to your bank interview, along with a questionnaire if you would like to use that for this process. So a word about greenwashing. Big banks have lots of money, and that means that they can spend a lot to make themselves look really green. So always keep that in mind when you're reading the literature. We like to take the example of the Net Zero Banking Alliance, which sounds like a fine alliance. But then when you look at the members of that alliance, they include Chase, Citi, Wells Fargo, and Bank of America. Where have we seen those names before? Oh yeah, they are four of the biggest, worst offenders. So beware of greenwashing is the message there. Lastly, communication is key. It is so important to send a signal. So when you are getting ready to leave your bank, please make sure to tell them why you are leaving. If lots of folks start to leave the bank and say it's because of its fossil fuel lending, this sends a really important message to management and will hopefully over time encourage them to change their practices. Similarly, when you join a bank, take a moment to tell them why you chose them. This sends them an important message that customers really care about and are paying attention to their policies. It's kind of like reinforcing positive behavior. But to really get the most bang for the buck, so to speak, we need to amplify the message. So some of us are already protesting outside of banks like Chase and B of A with our 350 mass nodes, with 350 Mass's Climate Courage Working Group, and with other fine environmental organizations such as Stop the Money Pipeline or Third Act. So the message is, let's continue to do that and to grow our numbers, because we have to let the public know what these banks are doing. And we also want to put pressure on these banks to change their practices. And now, of course, we also have information that we can share about better alternatives while we're standing out there in front of those banks and hopefully engaging the public. Lastly, when you make a change in your own banking, we're asking that you tell family and friends why you've done it. This may encourage them to do the same. Okay, let's take a few deep breaths as we transition from banks to credit cards, and I am going to take a quick drink of water. All right, so it's definitely more straightforward to change your credit card than it is to change your bank. But we started off this evening with banks, and now you're going to learn why. It's because there is a bank behind every credit card, and specifically, there is an issuing bank behind every credit card. The issuing bank is the bank that gets your interest payments, your annual payments, your late payments, and so forth. So it's not Visa or MasterCard. These companies are processors, sometimes called networks. They simply enable the processing of the credit card transaction. There are 4 major processors. They are Visa, MasterCard, American Express, and Discover. And it's next to impossible to find a credit card that does not use one of these 4. And not to muddy the waters, but American Express and Discover, in addition to being processors, are also banks. There's an issuing bank behind every credit card, and it's not LL Bean or United Airlines. These are retailers. Their name is on the card because it's their way to get you to buy more with them and to build up loyalty to them through bonus points. There's an issuing bank behind every credit card, and it may not even be the small local bank that you get the credit card from, which might simply just be the marketing bank. So let's give you an example. If you were to get a credit card with Middlesex Savings Bank, Middlesex is simply the marketing bank. The bank, the issuing bank behind the Middlesex credit card, the one that gets your interest payments and your annual payments and so forth, happens to be Elon Financial, which is owned by US Bank, which is not a bank that aligns with your values. So the point of this slide is know the issuing bank behind your credit card. Let's look at some examples. So on the left, we've got a card where United is the retailer, Visa is the processor. And then if we look in the upper left-hand corner, we see that very familiar symbol that represents Chase. So that should tell us that Chase is the issuing bank behind this credit card. But just to make sure, you can flip over the credit card and look on the back at the fine print. And if you see the Chase name in the fine print as well, then that confirms that Chase is in fact the issuing bank. If we look at the top right-hand corner here, we've got LL Bean as the retailer for the card. We've got Visa again as the processor. But in this case, we don't really see anything about a bank on the front of the card. And so we've got to flip it over and look at the fine print. And here you see circled in red so that you can see it, MBNA America. That is the issuing bank. Now, if you were to Google MBNA America, you would find out that it is owned by Bank of America. So in fact, this LL Bean credit card is really in effect a Bank of America credit card. Remember these guys? Make sure that your credit card isn't backed by one of them or one of these. And you can get a little bit more information on these banks in the documents that we'll be sharing with you. So given the framework we presented for credit cards of knowing who the issuing bank behind your credit card is and ensuring that that bank aligns with your values, here are some terrific choices for you to consider. So the first 3 names here are state credit unions. You saw them earlier because they all receive an outstanding CRA rating. And then the next 3 are the federal credit unions that you also saw earlier. These 6 credit unions are the issuing institutions behind their credit cards. We had a very tough time finding local banks that had their own credit cards, but we found one, and it's Martha's Vineyard Savings Bank. But we did also find out that Martha's Vineyard Savings Bank is only the marketing bank, and that the bank behind the credit card is TCM. But luckily, TCM is an institution that aligns with your value. So all of these are really great choices to consider. A good choice is the amalgamated Visa or MasterCard. We have done research on Amalgamated Bank, and we've spoken to folks there, and actually we think it is a fine bank. The credit card, though, is only rated a good as a good choice, because Amalgamated Bank does not have any banking branches in Massachusetts. And also Amalgamated is the marketing bank for this credit card. The issuing bank is FNBO, which is First National Bank of Omaha, which incidentally gets an outstanding CRA rating. But this credit card is rated only good just simply because it doesn't fall into the framework that we've set. But it's a perfectly fine card to consider. And I might just add there, because it's come to our attention just very recently that someone we know has had an Amalgamated card for a while. And when they checked the back, they saw that the issuing bank was actually Elan Financial, which is not one of the banks that we like. So I guess that is a lesson for us, and we continue to learn as we go, that before you get a new credit card, please confirm ahead of time so that you know who the issuing bank is. These cards are rated fair, but aren't recommended. All three of them have stated climate missions, but there's not a whole lot of transparency behind how they achieve their mission. And so it's really kind of hard to ascertain whether they are really doing what they claim to be doing. And in the case of aspiration, we include in our documents, which you will get, a link to an interesting article by ProPublica that claims that aspiration, in fact, does not do what it says it does. So, again, as we warned earlier, beware of greenwashing. So to wrap things up, here are the 5 key takeaways from tonight's presentation. Number 1, change your credit card if the issuing bank is a major offender. This is pretty straightforward and easy to do, and you'll see in the documents that you get, we have links to help you to do that. Number 2, if you bank with one of the worst offenders, please consider making changes to your bank. And here at Stop and Steer the Money, we would love it if you would do that sooner rather than later. But we also appreciate that everybody's busy, and sometimes you can't always get to it right away. And if that's your situation, we just ask that you set yourself a deadline for changing the bank. And in another moment, I will talk about one deadline in particular. Number 3, communicate to the banks while you're leaving or joining. Cannot say this enough. There is tremendous power in your message. Number 4, let's amplify the message. Share what you've learned and what you've done with friends and family. And number 5, please join us in getting involved in bank protests and spread the word about banks and credit cards that align with our values. Back to that deadline. We would ask that if you can't do it right away, we'd love it if you did it right away, that you at least consider 3-2-1-2-3. What the heck is that? Well, it's an easy way to remember March 21st of 2023. This is the deadline that Third Act, which is Bill McKibben's new organization, has set for a kind of mass protest. They are hoping that on that day, everyone around the country is going to cut up their bad credit card and change away from their bad banks. So there's great strength also in mass movements. So you can make your changes now. You can set a date sometime in the near future, but at the very latest, please do it by 3-2-1-2-3. Here's a quick snapshot of the documents that we're going to provide you with to help you change your bank and credit card. We've got a 2-pager on climate-friendly banks. We've got a 2-pager on climate-friendly credit cards. Then we've also got documents that are a bit lengthier that go into more detail for those of you who might want to go into the weeds. And we've also got other fine documents there, such as the bank interview document, which I mentioned earlier. And I believe we even have some breakup letters for when you break up with your bank. So we hope you found this presentation helpful. It is made possible by the dedication and tenacity of this group of people, a subcommittee of our working group that has really worked on these topics tirelessly for many months. We'd like to thank Ed and Jim, Kate and Alan, Joy and Amy. Thank you. And we'd also like to give a special shout out to Ryan Delaney, who helped us with this wonderful slide presentation. So we hope that you've gained some helpful insights from all their hard work. We'd also like to mention that the work, while it's extensive, is not comprehensive. And we focus on climate and social justice. We do not take into account financial features. What do we mean by that? We don't take into account things like annual fees, interest rates offered, cashback offerings, and so forth. So this is yet another reason why the final decision really needs to be yours, because you know best what your financial situation is. Okay, and now I am going to stop sharing the screen here. And we're going to take your questions. And again, as mentioned earlier, if you do have a question, please put it in the chat. I would like to introduce you to Amy Hunter, who is a member of our 350 Mass Metro North node. Amy is going to scan through the questions in the chat, and then she's going to pose them to Kate Enderlin and Alan Field, who are both part of the Stop and Steer subgroup and have helped with all this great research. And we will certainly try our best to answer your questions. So Amy, passing it on to you.
Thank you so much, Ingrid, for that excellent presentation. And I'm sure you've inspired many people online here to take action. If not tonight, then definitely by 3/21. I have a few questions already in the chat. The first one I'd like to ask is one from Judith Black. If you never miss a credit card payment, basically you're not paying any interest, why does it really matter what credit card you pick?
That's a great one for Kate.
Nice volley, Alan.
Okay, if you're using that credit card, and as you learned tonight, there's this issuing bank behind the credit card. That bank may be funding fossil fuel projects. So we're trying to stay away from that particular scenario. That's the real short answer to it, but we are trying to stay with our green banking and green cards, and not really letting any of our money fall into the hands of people who are investing in the fossil fuel industry.
I think another part of what Judith was asking about is how do they get money out of our credit card use? And it's not just the things that Ingrid mentioned, but also when you do it, there's a little slice taken out of every transaction as well as the other issues that were mentioned. So they will still get some money even if you pay off your account every month completely. They still get some.
You're right. That's called a transaction fee, and it can be anywhere from 3 to 5% of your transaction. So they are taking that money and utilizing it in ways that we may not be happy with.
Yeah.
Very true. Thinking of 3/21, if we decide to move our bank or credit card before 3/21, does third act, do we know, do they want us to cut up our credit card and put it on social media exactly on that date? Can we help amplify their message by doing that?
Can I maybe take a shot at that, or Alan, go ahead?
Oh, sure. You can add on to mine, I'm sure.
Yeah.
Yeah, I personally think that we should not find reasons not to act. So I think we should start making any change that we can. It's not always an easy process, so it'll take some time, and be patient with yourself. But you could both do that. You can stop using your credit card and you can still cut it up next spring. You could even cut it up now and say you cut it up next spring. So I wouldn't worry too much about that, but it'd be good both to make the transition and to be part of a large community action next spring.
Yeah, I was just going to add to what Alan said, and you could already, I mean, if you're ready to, you can go ahead and switch to your new credit card, but hold on to that old Chase card and then, make the video so you're still cutting up your Chase card.
Yeah,
And-
being on
and
this team, I made the transition to a credit union credit card, and I did have a Fidelity credit card, Visa card that was backed by Elon Financial. And actually, I still have it. I don't use it anymore, and someday I can cut it up with abandon.
There'll be some fun in that, I'm sure.
And obviously, what they want you to do once you've cut up that card is to let that financial institution know why you did this, because they're investing in the fossil fuel industry or a credit card through a fossil fuel industry. And if you want to do that on March 21st next year, fine, but at least get everything so that it can be done by then. You might have changed to a new card right away, as Alan mentioned, but
Mhm.
letting them know whether it's now or later, why, that's the important piece.
Exactly. Great, thank you. Quick question about 350 Mass. Is there an equivalent organization in New York State? Do we know?
It looks like Kurt has put things in the chat about where to go in New York.
Excellent.
It's not New York alone, but Third Act is having a national series of presentations on these financial topics that will cover all the states.
Great, thank you. Next question. What are some pitfalls of interviewing our banks about their fossil fuel exposure? And who on the bank staff is best to ask for?
I think I'd want to go to the branch manager if you could get to that person. They're the
Mhm.
person closely connected, possibly with the CEO of the bank. And you might get more accurate answers from somebody like that. You may have to go to a member service representative, but the best would be the manager. And it's going through the questions. They may be hesitant with some of them. I'm not sure I would push really hard, but if they're not willing to answer them, you have to ask yourself why and make your own decision.
Yeah, I
There was
might
a-
add that again, on this team, early in the process, I went to Cambridge Savings Bank, my bank, and I asked to speak with the bank manager. And that actually was really a pleasant conversation. It was really, people may often be quite supportive of, or they probably will usually be supportive of what we care about. So it was actually a very pleasant and productive and informative session we had. It was nice.
Mm.
I truly think that if we go back to the whole idea of staying local and staying small, that they will work with you. Because if you go into one of these big international banks, they're not really going to care.
Right. There was a follow-up point to that question about how might the bank personnel try to greenwash when you talk to them?
Yeah, they might not. In my case, they didn't, because Cambridge Savings actually has an outstanding rating. Yeah, you have to decide how aggressive you're going to be, how much you're
Mhm.
going to challenge what they say, but you can listen.
We did, just as an example, last year we went to a Chase Bank and gave them a greenwashing award, went to the manager of the bank, and at first she was very excited that she was getting an award until she listened to what we were reading, that they were greenwashing, saying they were doing all these fine things and they really were not. And she basically listened to the whole thing and said, well, I don't make any decisions for the bank. And we said, we understand that. If you could pass this information along to your CEO, we'd appreciate it. And it was kind of a very interesting opening. And I think it gave that manager a little more to think about.
I'm sure, especially as Chase is trying to actively get more into the Boston market. It's probably a little disconcerting for that manager. But another question on the credit cards, is Discover a good alternative? Are its transaction fees less than Visa, MasterCard, etc.?
I think MasterCard and Visa are approximately around 3%, and I haven't looked at it recently. American Express is usually the more expensive of the ones, and you'll notice when you're buying things, they don't offer American Express in a lot of places because they do not want, the retailer does not want to pay the extra 5%. They'd rather pay the 3%. And it changes probably year to year. That floats around a bit.
Mhm. Thank you, Kate.
Yeah, I think probably you're going to end up wanting to work with Visa or MasterCard, I would guess, more likely than not.
Right. Another interesting question. In an interview with Bill McKibben, he recommended first pitching your credit card issuer on cleaning up their lending practices and then leave if you don't get satisfactory action. And she's wondering if she's misunderstood. It does seem like a long shot, especially with B of A and other institutions. So
You're not going to get me. You're not going to walk into a local Chase branch and have them contact Jamie Dimon and have him change corporate course. So that would be a little unrealistic, but collectively we can add a lot of pressure.
I would also just add there that sort of goes back to the signal issue earlier, that it sure doesn't hurt to give that bank a call and say, hey, I want to be banking with an institution that's fossil fuel free, and it looks like you guys aren't. What's the story? Because, every time banks get calls like that, if they're getting enough calls, someone at the bank is keeping tabs. And at some point that does get higher up. Now, it doesn't necessarily mean that they're going to change their practices, but it is sending a signal. It's telling them something's up.
So we want all these things to happen between now and March, having them go out there every day to get more and more of them, and then this big bang happening on March 21st.
Exactly. Stan is just following up on wondering, have we approved of Discover? Is that an approved card, regardless of transaction fees?
We considered both Discover and American Express as reasonable choices. They weren't our top choices, but they were down there on the list somewhat, but still reasonable.
Great. And there was an earlier question. Do credit card companies also get a cut of the purchases?
That's that 3 to 5% transaction fee.
Great. Just wanted to clarify that. Then also wondering, all of our top recommends seem to be credit unions. Any guess as to why?
This is on credit cards?
This is about credit cards, I'm assuming. Well,
Yes.
actually,
There's one local bank.
yeah, there's one.
Yeah.
It's about banks.
How about banks? Yeah, well, that is kind of in their DNA, as I think Kate used to like to say, that they are designed to serve the community. That was sort of their cause for creation. So quite naturally they do. And so we really found that they sort of bubble to the top of the list as we're applying our measurements to these banks and credit unions.
And many of the credit union credit cards process everything themselves, so it's staying in the local community. Many of the banks.
I'd like to expand. I'd like to expand on that. Actually, we have a long list of banks in Massachusetts that are either outstanding or highly satisfactorily rated with the CRA. Really, only one of them, I believe, actually finances and issues their own credit card. Like I have Cambridge Savings Bank. They don't have a credit card. But then lo and behold, it's totally different. The credit unions, lo and behold, they issue their own credit cards by and large. Not all of them, but most of them seem to. So it's really quite different. And so I'm happy with Cambridge Savings Bank and the credit union that I'm using for the credit card. But you could have both. If you pick a credit union first, you may find they have a credit card you like too.
Right, and we're talking about credit cards and banking, like having a checking account, and Robert is asking about refinancing a mortgage. Interest rates, of course, what they are now. I doubt too many people are going to be refinancing because banks, I know this one, will not accept, your current mortgage rate unless you're doing a
I could answer
refinance with
for-
that same bank, possibly. But
I can answer for part of that, and that is making these changes are not always quick and easy, even changing the credit card in the bank. If your bank has, and especially if you have a CD on deposit with a bank, or if you have a mortgage, don't panic. Don't feel you've got to complete it all immediately. You've got to look, and maybe with advice of a financial advisor sometimes, look and see what you can do and when you can do it. And if you're thinking about it and you're working towards your goal, maybe you have to wait a year for something to mature. That's understandable. So we need to all make small steps and make bigger steps, and we'll make progress together.
And even if you can't move your mortgage, you can move some of the other services that you're using at that financial institution, the checking account or the savings account or a CD or something.
That's right. That's right. I think I might pepper in a few questions that we had from our node members when we had this presentation given to them in a trial run. And one of them was, what about my investments? We've been talking about banks and credit cards, but what about that big juicy topic?
Yeah, that was we really had three topics that we really wanted to address: banks, credit cards, and investments. Frankly, to get to the bottom of the banking industry in particular, and the credit cards, really took an enormous amount of research. And we really want to get to investments, but we have not got there yet. And it's a big topic. That's going to be a challenge too. I might add that Third Act, I think, maybe they're ahead of us on this one. They are going to be doing a presentation on investments fairly soon. And I look forward to learning from them. Since we can't be teaching them, we can learn from them. But it's a difficult and important issue. And I think somebody said something. If anybody has like any more than $100,000, it's almost inevitable in investments. It's almost inevitable that some of it's going to be supporting the fossil fuel industry, unless you have some solution, which I'd love to know about. But there may be some.
Well, if there is one, we will definitely find it, Alan. May take
Please
us
tell
a year
me.
or two, but we like to keep this team together, right, Ingrid?
Yes, and we hopefully at some point will get to the investments. But as Alan mentioned, Third Act is putting on a series of 4 webinars. They had the first one, which was an overview. They are also going to be doing, I think, banks and credit cards some point later this month. We are guessing, and we certainly have no inside information on this, that they may be taking a little bit more of a national approach than we have. But anyway, after the banks and credit cards, they were going to turn to investments. So, you can always go to their website, thirdact.org, and sign up for their subsequent webinars.
Great.
I might just mention that Jim just put in the chat again the link to our documents. There are 5 documents there in the folder. About the banks, credit cards. Then there's more information about the banks and more information about the credit cards. And then there's I think there's more numbers, aren't there? 6 of them. Then there's a guide to a bank interview and a questionnaire. And what I just wanted to say about all of that is, for example, one question that came up before was, would changing my credit card change my credit rating? Well, that's a bit, actually turns out to be a big topic. And so that's not on our credit card main document, the climate friendly credit cards. It's on our background document. So there's lots more information on the background documents if you want to look at them. And they're all at the same link.
And also all of these documents have important links to even more information. So everything that we've discovered over the past several months, we tried to make it available to everyone on the webinar today.
All right. You're welcome to go down all our wormholes.
We got rid of the ones that weren't any good, so they're only the good ones in there.
Yeah, filtered
Yeah, in
them.
a sense, we were collecting information, and so in our documents, we're sharing our sources.
Right. And yes, Gail was just asking, are we sending links to the documents via email? And we are definitely doing that after this.
In the next few days after the after the presentation, obviously in the next few days, together with the link to a recording.
If you click where in the chat, it mentions what the link is. There's 3 little dots. If you click on those 3 dots, it allows you to copy that link, and then you can paste it into some document and save it.
But it will also be in the email.
Yeah.
We're sending out.
It looks like that there's a lot of interest in our next topic, which is investments. And I would just invite Kate and Alan, if you'd like to make any comments about the other items here in the chat, because I think we're not ready to.
I'm thinking there is another
weigh
topic
in on
that I've heard about in the past, and that was the question about how about, I get cashbacks for my purchase, I get frequent flyer miles, and if I change to some other card, maybe I won't get them. And it's true, maybe you won't, although it's also possible that maybe you will. But we're frankly looking at values first, and we're not looking at how many miles is it to your branch office or to the closest ATM, or what kind of cashback deals might various cards offer. Frankly, that would be actually an enormous morass to get into. So part of it is, for myself, I've decided, okay, this is what my values are. I'm going to make the change regardless of how it impacts my cashbacks and flyer miles and things like that.
Right.
Our real purpose was to find some banks and credit unions and credit cards that were not funding the fossil fuel industry, that had social justice, especially on the local level. And those were kind of most of the criteria we were looking at. We weren't looking at all the financial issues, and you have to build some of those into whatever you're doing for yourself personally.
Great, thanks. And there was another question on credit cards, changing credit cards. Would that affect my credit rating? Someone had asked.
Okay, I thought that was going to be a really easy answer, and it's a little more complex, but I think we found that out in everything we looked at. At the beginning, it was very complex. So if you wanted to take a credit card that was funding fossil fuels, say, and my recommendation is start out opening a brand new credit card, the same line of credit, and that is the cleanest way to go across. Then you can close out the old credit card. During the application, if you happen to have a balance on this old fossil fuel driven credit card, as you're applying for the new green card, you can also request a balance transfer during the application process. This would allow you to keep the same numbers. If you had a $10,000 line of credit on the old card, you have a $10,000 line of credit on the new one, and you're moving that same loan balance over, everything has virtually stayed the same. So that when you then cut up the fossil fuel based credit card, nothing changes. As far as the credit bureau is concerned, you're all set. The problem is credit bureaus have something called a credit utilization ratio. What they do is take your credit card debt, and if they do the ratio of your total line of credit card. So you might have $20,000 in credit cards and have maybe a $4,000 balance. So your credit utilization ratio is 20%. If you just get rid of that old credit card, your $4,000 balance, and you only have $10,000 instead of 20, you're now at a 40% ratio. You've gone over their imaginary 30%, and it could have a negative effect on your credit ratio. So the easiest thing to do, as I said, get your new card, move over your money, and then dump the other one so that that total line of credit stays approximately the same. So it's a little tricky, and there's even more to it, but that's just kind of a very quick overview.
So it may be worth taking a look at that closely in our background documents, because I think you've done an excellent job of describing every possible permutation that could.
There's a lot more information in there for sure, because we really looked at that one when we realized the effect of asking someone to cut up a card, that there are these other issues. There is one other slight issue, and I'll just touch on it briefly. The age of your credit card If you've had it a year, that's one thing. If you've had it 20 years, the credit bureaus actually look at the effect of aging. Because if you've only had this for a year, it's not quite the same as if they know you've got a really good credit history for over 20. And everything I've read, and this is in that handout as well, it may make your credit ratio dip for a month or two, but once you're back and doing all your same things, it goes right back up. So they actually have two things, and one is your credit utilization ratio, and the other is aging. But there's a lot more information in that handout about it.
Yes, very worth a deep dive. Just wanted to touch back onto CRA, because I know that some of our first node members that listened to the presentation had a question on who actually assigns CRA ratings to banks, and what other than the CRA rating did we take into account when we were coming up with our list of good banks?
Okay, the Division of Banks in Massachusetts, again, we're only working in Massachusetts. All of our research was local to the state. And the Division of Banks in Massachusetts has a CRA department, and they send out examiners to all of the banks and credit unions and a few other financial institutions. Between 3 and 5 years, they're doing an exam. They are looking at, are they doing redlining? Are they helping their community? What are they doing with all of this? Also, they look for safety and soundness, but the big part of this exam is community reinvestment, and that is monitored by the banking department. There was a part 2 to your question, but I forgot.
Well, it's wonderful that the CRA rating tells us all that in a nutshell. It's great, and can do even a bigger deep dive on that if you look at an individual bank's CRA report. But after taking the CRA rating into account, what other things did we look at to come up with a list of good banks?
I might just comment that we tried to take a particular bank and find out who are they lending to, and who are they investing in, possibly. And perhaps they don't invest, but they do lend. And basically that information is not readily available. And also it'd be very complex, it'd be a long list. So that was really a path we tried to go down, but really couldn't. I don't think, and even if you manage to figure it out for one bank, then you've got to do it for all of them to be fair to everyone. You've got to use their same metrics on everyone. And that would have been a 5-year project, who knows how long.
One of the things we did do for the federal credit unions, because we didn't have that nice, simple CRA rating, was to go into a deep dive and look at what type of lending they're doing, but also looking at what kinds of things are they doing for their community. Are they really out there helping the community out? That they're doing their own, as we said earlier, CRA is in credit unions' DNA, and they're there to help that whole local community. So we did do some of that with the federal credit unions that we looked at, the few that we named, but there's a lot of different pieces in this.
One slight measure about the ones that didn't have CRA ratings, if they issued their own credit card, that was kind of a little indicator that they were, at least that wasn't a reason not to use them, that they were issuing their own credit card rather than using Chase or a major bank. In the chat, I see there's some comments about ESG ratings, some discussion going on. I don't know if we want to mention anything about that. Just how it is. It is something, years ago, I always thought ESG was a great thing. Hey, they're thinking about these important issues. But the problem is almost everybody seems to be using that terminology, those 3 letters, and it's become sort of a tool of greenwashing. I don't know if somebody can describe that in more detail. I know somebody there, Ed, knows it in more detail.
Yeah, and I think it's fair to say that that's really to do with the investments. It's not about banking, it's not about credit cards. So I think we'll save those for our next project, our next presentation on investments.
Well, I think banks, I think the local banks will talk about what their hiring policies are there, that they look for a diverse workforce in their company and stuff like that.
Well, we definitely looked at that too, didn't
Yeah.
we? in addition to the CR rating. One last question before we turn it back over to Ingrid to close. Are there any national fossil fuel banks? Did we find? We are all talking about the local banks, but is there any national bank that could be recommended?
I mean, fossil fuel free.
Fossil fuel
Free.
free,
Yeah.
sorry. Yeah.
I think the short answer is we didn't find any. Amalgamated Bank is not just Massachusetts, but it's, on the other hand, it's not a bank either fully. I mean, it is a bank, but it works with another bank. So I don't know of any. There may not be any.
Probably a good one for the third act webinars, because they are on a national basis and
Yeah.
may have done more research than where we were really working locally in Massachusetts.
Yeah. I mean, I think part of it is because being a national bank, it's inevitably going to be a bigger bank. It's going to have more funds invested, and when you've got billions of dollars invested, boy, it's going to be hard to keep it clean.
Keep it small, keep it local.
Yeah.
Exactly. That's our motto now. I
Small
want to
is
thank
beautiful.
everybody for their questions in the chat and the lively discussion. I can tell there's really an engaged community out there. So thank you so much, Alan, and thank you, Kate and Ingrid, for popping in. And I will now turn it back to Ingrid for the close.
Great. Thanks, Amy, Kate, and Alan. Those were some great questions. And I'm glad we were able to help out here and there on them. And if there's anything that we've learned, is that there's also tremendous interest in investments. So that means that at some point we'll have to push on, in that area as well. But so thanks again. We'd also like to thank Kurt Newton and Sam Payne for helping us with all things technological this evening. We wanted to thank our co-sponsors, LexCan and the Massachusetts chapter of Elders Climate Action again. And just for the 100th time more, but you can never say it enough, just to let all of you know that we will be in the coming days sending out the link to all of these documents and with a recording of this presentation. And we'd really like to thank all of you for coming tonight and showing your interest and throwing out your great questions. Have a great night. Bye, everyone.
Bye.
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 Thanks for coming.
Thank you.
Bye, everybody.
Thank you, everyone.